What's up, guys? This is Crypto with James talking to you today about Coinloan. This is one I'd stay away from. Seriously, I would, and I'm going to explain why in a second. Before I do, I update the spreadsheet. The first 26 coins I spoke about on the channel. Had you invested $100 into each of these when I released videos about them, and you're still holding all of that crypto, be in profit for over 14 grand. At one point, this was over 100 grand, but we've had corrections, and now we're in a bear cycle. If you want to see the coins that I own, you can come check out Copy My Crypto. One thing I've been banging on about for a very long time is build the list of coins you're excited about. Keep researching, keep reading, keep learning. Because it doesn't matter what financial market it is, a bear cycle, a recession is the best time to invest. Traditional finance markets take longer for a payoff than crypto, but the payoffs are massive in all circumstances. So investing during the dip, during the crashes is key. If you've not built your list of coins that you're excited about, you can come see exactly the coins that I'm going to be getting in on during the bear cycle. And they'll be the coins that I think are 20x, 40x, 100x. So if you want to see what they are, you can click the link in the description and check it out. Right, Coinloan. I don't like this. I think there's a risk here. So Coinloan is a European crypto lending platform under the Estonian Financial Authority. They offer interest-earning deposits, fiat and crypto loans. Exchange services by Coinloan are available worldwide, including the US, the UK, and major EU companies. The three main services they offer are interest-earning accounts, crypto and fiat lending, and crypto exchange. And the instant loan is a service for crypto-backed loans with 20 to 70% loan-to-value ratio, with a 1 to 36 months loan duration. Now, what I don't like about it fundamentally is I think they're going to be open to a lot of scrutiny down the line. These percentage yields are fantastic. Not arguing for a second that they are, but those percentages are too high. That's untenable. So something's off. Like you can't, they can't be offering 12% APY on the pound or the euro or Tether or USD. Those percentages are enormous. I mean, you're even talking about like 7.2% on Bitcoin. You know, I don't think I've seen 7% on Bitcoin anywhere. And the provided rates include a 2% reward for CLT staking. So you do have to bear that in mind. That drops down. That's if you're staking the Coinloan token. But you need to verify yourself, make a deposit, and start earning. It's genuinely like, look, this is fairly similar to your sort of Celsius's and your BlockFi's. You know, they're showing the difference between their percentage yield and every other bank, which, you know, we all know. We all know the banks screw us, but the supported assets and the rates of percentages that they're offering are too high. A lot of them are the percentage yields are too high compared to what's out there. So that's going to change. Secondly, what I don't like is the actual amount. The circulating supply is 9% of the max supply. So over the course of time, you know, for it to even hold its price point, by the time those max, that total supply is out, this is now like a $440 million dollar market cap. Now it could well be. Maybe I'm massively underestimating it. But one thing we know that's coming down coming around the corner is regulations. And yes, they're saying they meet the Estonia's, they're compliant with modern financial regulations. That's not going to be the case for ages. Celsius has already had to change all their stuff so that it's, so that the investors earn a certain amount of money, like certified investors. I can't remember the turn of phrase. BlockFi has already been told that they've got to reduce their offerings effectively. there's a lot here that rings problematic down the line. The percentages, like I said, are awesome, but even say you want a loan of like €1,000. So if the collateral amount is, let's say, 0.01, you're not going to be able to get a loan, right? Your collateral amount has to be has to cover basically the actual loan, and that's if you want 20%. So this setting allows reducing the loan to value. So the lower the loan to value, the bigger is the room for collateral currency value fluctuations. You can always increase then the collateral amount, thereby decreasing the loan to value ratio. The problem with this is if people are unfamiliar with how these kind of loans and stuff work, you can end up getting properly wrecked. And without knowing the ins and outs of how they run, how they can offer those high interest rates, which presumably is an arbitrage run on multiple different sort of DeFi platforms. Even if it's that alone, that's going to have a big impact. Like if they get caught in bad positions, you can get wrecked. Now, I'm surprised, but they've already got a lot of stuff in terms of like Swift and SEPA, but I don't think this is going to be compliant for long. They're saying that they're compliant right now, but I think with the ever-changing like landscape, particularly with regards to these sort of stablecoin offerings or actual currency offerings, I'm not convinced that they're going to be able to continue offering services to people in the US or in the UK for that matter, if you're offering those levels. Because we're talking about an insane return. Like, you can't, 10% or 12.3% on the pound, you can't get that in a bank. You can't even get 0.01 in a bank these days. So the UK government wouldn't be happy about this, and they want to regulate. They certainly want to stop users from the UK, because you're just inflating the overall fiat supply. Euros, same. I think this is something that is interesting, and I think there's potential that it could do all right, but fundamentally, I think this was one I'd stay well away from, because I think they're going to be under such scrutiny. I think it's inevitable, because the offering is so high, and I think it's untenable. So I can see that they're partnered with massive people as well, but this is definitely one I would not be going near, because, like I said, look, we know regulations coming. They've also lied on the site. I was checking that. Partnered Binance, Kraken. I don't see Binance or Kraken there. Yeah, one I'd stay away from, because you shouldn't be seeing. Because how are they partnered with Binance and Kraken if they're not even offered as a tradable asset on Binance or Kraken? Unless I'm missing something, which I do not believe I am. Or unless they're using leverage trading on Binance and Kraken, that might be the limit. how they're justifying it. But yeah, it's one I definitely would stay away from, because I think this is one that can be opened up to so much bloody scrutiny down the line that I think you could see it collapse under the weight of all the regulations and scrutiny that it gets. So just wanted to draw attention to it, because we all look for nice APYs, but do need to see what's coming around the corner. And what's coming around the corner is going to be scrutiny around stablecoins, and it's going to be scrutiny around it's going to be scrutiny around stablecoins, and then a CBDC. That's on the horizon. It's inevitable. So yeah, just be careful about that, guys. That was all I wanted to say today. Yeah, hope you like the video. Hope you can appreciate where the sentiment's coming from. If you're a Coinloan user, let me know, how do you like it? Are you concerned about the very high APY that's being offered? Are you fearless about it? You're not bothered? Let me know in the comments down below. Subscribe to the channel, hit that bell notification so you know when new content's coming out. And if you're not prepared for your bear cycle, if you haven't done your research in terms of coins, you can come and see the coins that I'm getting into at Copy My Crypto. It's every coin I'm getting into during the bear cycle will be ones I believe can 20x or more. So if you want to see those coins, learn about those coins, then you just have to click that link in the description and check it out. Anyway, take it easy, folks. Bye-bye.